morning, everybody. Good morning and welcome to the session today. Hope you're doing well. So, going to be a quick one today, guys. First and foremost, hope you all had a really nice Halloween yesterday. We had a good time with the family. We we watched a film we probably shouldn't have for the kids last night, especially the two oldest ones, but I think they had a good time as a result, and it was quite a laugh for all of us. And got out to do a little bit of trick or treating in the London area, which was really good actually. And I'll tell you, I don't really rate Britain usually for Halloween, to be honest, not too much, but there were quite a few good performances, I think, from people, and they did actually put some effort into the houses, which was nice for the sake of the kids and stuff. So it was all good. But anyway, today, short session, guys. There's not going to be, great deal to go through. A little bit of a reflection period, I suppose, like we do on many of our Fridays. Going to have a quick look at what's going on with the equities, of course, as well. The mixture here. We are going to look at the econ calendar, of course. Today is the day. We have the United States non-farm payrolls and employment stat from the US, so that's going to be a big one. That's this afternoon at 12:30, which is clearly going to have some kind of impact to the stock markets and ultimately the DXY currency as well. Now, the forecast for the NFP at the moment is 113k. Now, 113k forecast, that's quite a big jump down. We're talking about 140k worth of jobs being taken. So, that's definitely no small number. So, if that forecast comes anywhere sort of towards correct, ultimately, the market's going to price in a significant portion of money behind what the forecasts are suggesting. Now, every single firm, the way they're structured, is going to have their own analyst team, which are going to be able to work those numbers out, and then the market's going to price in. When we say the market's priced it in, well, the market's not priced in what some basic economic calendar that we have access to. That's not the information they're pricing in. They're pricing it in accordance to what their analysts are suggesting to them, right? The analysis that they're providing. So, I think if it's anywhere close to the 113k, the market impact's still going to be relatively significant, but it's probably not going to be too much of a surprise, which means we might get an initial blip and then things will resume normal trading action. However, if we get a sub 100k move today, okay, so we're only talking here about, let's say, 15,000 jobs less than estimate, that is going to be dramatic in terms of market outcome this afternoon. Dramatic, because it will mark a turning point for the US employment market. I think 113k, to be honest, is probably going to mark out a bit of a change with the US employment market anyway. But I really, really do believe that. A sub 100k thing would have dramatic market impact. So that's the one today. Now, I would historically do an NFP stream, but I am unable. House full of family and friends this afternoon, and I apologise, but I'm not sitting in the trading office and hashing out an NFP that's probably not going to have too much of a market impact, let's be honest. So I'm going to give this one more power over to you, and if you're about, then you can make the most of it, or if you're not, then you don't need to worry, do you? We do have the unemployment rate for the US, of course, as well. The unemployment rate forecast at the moment is 4.1%. If we drop down, 4.1, I think 3.3 is a bit too negative. So I think maybe a 3.8 or 3.7 alongside the NFP that's only adding 95 to 100k jobs. That's going to really paint a picture about the state of the US job economy, which is going to be interesting to see roll out. So we'll go back, have a quick look at what's been going on here then. So on reflection, it's been a really mixed week. I mean, as it stands currently, I'm not even going to be trading the US Open this afternoon. However, I will be providing US analytics to you. So it'll be written format, it'll be the full breakdowns, everything you need to do, and you are more than welcome to utilize that information however you see fit, but you won't see it on the track record. It won't appear on the track because I will not be trading. So that is gonna be present for you though. So first of all, I would like to say a big thank you to UK Brent for coming up and hitting our target. We did eventually hit that 1 to 2.78, which is really going to help this week. I believe the current track record is sitting at about 3.1%, I want to say, something like that. So this is going to push us up closer to the 4% mark for the week, which is really nice. So good job, UK Brent. I would also like to say a big, wild thank you to the Aussie CAD, which also ended up coming to hit target for a 1 to 2.13, and this was yesterday afternoon. Obviously, that's not a huge winner, but it's a 0.52% addition to the fund, and for you guys, so that's going to be over 1% gained between oil and Aussie CAD, which is great. So that's going to push us well over the 4% point. We got the Aussie dollar, which was still running, which unfortunately, guys, did come up and knock us out, which was this one here. So this one didn't actually trade. This was printed here, but the trade actually triggered here. It did. The pending order actually got at 11:30. So we came up instantly, came down, was looking good, and then ended up bouncing from this previous low, which is really annoying to be honest, but there we go. So we bounced off that low and then rallied back, and yeah, it took us out. So that's minus 0.25, still providing over, I believe, we'll still be over 4% point. And then we have the Euro Oz, which never triggered. It continued kind of ranging slash consolidating. Yeah, I mean, it's consolidating. It did have a couple of nice little volatility swings in there, but it wasn't superb. So what we can do first of all is we can remove this. Okay, see you later, Euro Oz, no more. Aussie USD, that's obviously done. Aussie CAD's done, and UK Brent's done. And what this does is it leaves us completely flat for the weekend, which is what I really always aim for. We want to be clear for the weekend, and we cleared down with a couple of wins and a loss, so that's good. Also, worth mentioning gold. Now, in gold, we've been looking at counter trend trading, basically forever, looking at 1 to 2 fixed trades long and whatever we are looking for short. This took place yesterday, midday, and the counter trend breaker structure was absolutely fantastic. And then we were looking at this stage back down to the next major inflection point. Now, I didn't do the full breadth of the trade, unfortunately, guys, as I never do. I am a humble trader, and I am, unfortunately, I would love to be, don't get me wrong, but I am not one of those traders that can just call the amazing 1 to 8s and 1 to 12s and 1 to 15s and stuff on a regular. So I ended up doing a wonderful 1 to 2 in this little move here, and that was my counter trend trade for another 0.5%. So that was that one, and there was absolutely the opportunity to take one on the other side of it as well. But this was a really nice liquidity dump up here. So what happens from an institutional perspective is we have a rally. We can always look out for these areas of liquidity, like this, for example, that have never been retested. But we have these big rallies, and all the retail traders are taking their longs, right? And they're taking lots and lots of longs. We see them all over Instagram and YouTube and stuff. And they continue taking longs all the way around here. but they have these tiny stop losses. Really, really tiny stop losses, and stop losses in there for that trade, stop losses in there for that trade, stop losses in there for that trade, and they might do really well. Bear with, guys. 2 moments. So from that stage, we then see these. Don't worry about the noise in the background, guys. We're having new pieces of furniture delivered almost every day this week, it seems. And then what we have is these big moves that come and flush out all of the retail liquidity. It knocks every single person out around here and only leaves the smart money remaining. And that's what happens. It's a flush. So we flush out all of the retail money, and then we can resort back to the institutional funds, which then continue the sort of original trading parameters to the upside. So that's what's happened here yesterday. Really nice move, partially fundamentally driven as well. The catalyst did get it off the ground. And that's that. But what a beautiful move, right? A really, really nice move. And we've now officially retested daily liquidity here as well. So we can look at getting that continuation. Now, I'm not going to suggest any trading parameters for you today on gold, and that's only because of the NFP. I'm actually more confident with you guys trading the stocks without me here than I am gold. And the reason being is gold can be so damn fickle, and even though economically speaking, I believe it should be one way, gold could react in the completely adverse reaction to the NFP data in the way I perceive it to be. So without me being here, I'm going to take the decision just to let it go, and we'll see what happens from a historical point of view. So looking at the rest of the assets this week, I mean, if we go up to the scanner here, just get a bit of a broader view, we can look at the one change week. It's not been a huge week, guys. It's really not. Euro Oz was the biggest loser at minus 1.26%. Most of the assets have moved about minus 0.8, and that's where we've stuck so far. If we look at turning this around, the biggest gainer this week was that's Euro Oz, isn't it? The biggest that's obviously looking at the bloody US prints of these. So 1.07% for the euro pound would be, the way we look at it, the way we trade it, would be one of the biggest gainers, which is nothing. Euro's done very well. Euro's done really, really well this week. The DXY's had a little bit of a dip down, but it's not been anything major, has it? But the euro's been doing very well against the crosses this week. In terms of the equities markets, equities at the moment, they're doing pretty poorly, I'd say. UK 100 this is, but it's a wall of red at the moment. Finance is doing terrible. Health tech is absolutely getting crushed. Electronic, utilities, tech, commercial services, communications, consumer, and retail durables. Retail trade. It's all looking pretty bad. We do have a couple of outliers here. RKT, IMB. We've got Shell, obviously. You've got Glencore. A couple of these kind of keeping afloat, kind of doing okay, but it's not great at all. If we go back up to where are my Standard & Poor's, my God, guys, I mean, look at it. It's bloody terrible, isn't it? Really, really terrible. Lots and lots of red going on here at the moment. And it does cement the week, doesn't it? It really does cement the way the week has been, I think. In terms of our US stocks, I'm going to come out and analyse these later for you anyway in a written format. But the stocks have really taken a dent this week. Really big dents. I mean, this is from Wednesday, so we've got Wednesday, Thursday, and now we're into Friday where we're sort of bottoming out here. But this is a big, big move. And we started the week at around this area in here. So it really did, sort of cruise along for a bit. And then, boom, we have these big sell-offs. US 30 Dow Jones this week has been just a more continuation of the same thing. I think I prefer the NAS 100 in terms of its quality here, but that's definitely the better one to go for. And that's it.
you know, European stocks as well, obviously, they've taken a dip. We've taken a couple of profitable trades in the DAX this week and the UK FTSE, as well as lost some as well. But that's about it. So I think at this stage, team, I'm probably going to be wrapping things up there. I know it's an early one, so you guys can catch up on this session later on. But I wish you a wonderful weekend. I hope you have a really good day today. I am going to be in and around the office. It's not a day off. It's just the fact that I'm going to have such a busy house. It's not really not it wouldn't be too ideal to be doing sessions and stuff this afternoon. So, but I am going to be here. So I will be firing out the analysis for the US session. If there's any other little key things I like the look of, maybe around NFP time, I'll be firing them out as well. So I hope you guys have a really good day. Have a fantastic, obviously, weekend as well. And I look forward to catching up with you all bright and early on the Monday. So take care, guys. Good luck. Trade safe. Have a great one. And I'll see you then. Bye-bye.